Hey everyone, welcome to This Explainer. Today, we're doing something pretty exciting. We're totally pulling back the curtain on the actual financial systems that the wealthy use to build their net worth. We're skipping all the hype, all the fluff, and diving straight into the mechanics. We've actually got 7 distinct vehicles to explore, so to give each one the time it deserves, we're splitting this into 2 parts. Right here in part 1, we're going to lay down that critical foundation and dig into the first 3 systems. Let's get started. Okay. Just imagine this for a second. Your income just continues while you're sleeping, while you're traveling, or heck, while you're just spending a random Tuesday afternoon hanging out with your family. Sounds literally like a dream, right? But look, let's be super clear up front. We are absolutely not looking at get-rich-quick schemes today. Honestly, those are just fiction. We're looking at real, battle-tested systems. We're talking about how actual people build financial engines that eventually just run on autopilot.
So let's nail down what we're actually talking about here when we say passive income. Because the biggest myth out there, it's the idea that passive income means doing absolutely nothing. No way. In reality, there is really no such thing as a 100% passive income stream from day one. Instead, it's all about front-loading your effort. Building, creating, or buying systems that keep paying you long after that initial heavy lifting is done. It's kind of like planting an orchard. You do the hard work once, and the system pays you in fruit for years.
To really wrap our heads around this, we have to understand the massive psychological difference between active and passive income. Active income? Well, that's what most of us are taught growing up. You trade an hour of your time for an hour of pay. But the catch is, the second you stop working, the money completely stops flowing. Passive income is an entirely different beast. It shifts your focus to owning assets. And this right here is exactly why wealthy folks focus all their energy on acquiring and building assets rather than just begging for a higher paycheck. An asset works around the clock 24/7.
All right, so now that we've got that crucial mindset shift down, moving from trading time to owning assets, we're ready to explore the specific vehicles that actually get you there. And honestly, most people completely overlook this very first opportunity. They kind of just assume it's locked away for Wall Street insiders, but that couldn't be further from the truth.
Idea number 1, dividend investing, earning a share of the profits.
So at its core, dividend investing is simply you earning a share of a company's profits. When you buy a dividend-paying stock, you're buying a tiny piece of a real, actual, profitable business. And as a thank you, they literally deposit cash into your account, usually every quarter. The really beautiful thing here is that the startup cost is incredibly low. A total beginner can jump in with just 50 or 100 bucks using pretty much any modern brokerage app. The time investment? Also super minimal once you pick quality companies or funds. But here is the real secret. The immense long-term wealth potential comes from reinvesting those dividends. If you take that small payout and automatically use it to buy more shares, well, those new shares then pay their own dividends. Over decades, this creates an absolute avalanche, a massive snowball of compounding wealth. Now, let's ground this with a bit of a reality check. When looking at the stock market, the income potential on the reward side is incredibly passive. Literally, the more money you invest, the larger your dividend checks get. But on the risk side, stock prices do fluctuate, right? And companies can, and sometimes do, cut their dividends during tough economic times. So the most actionable advice for beginners who want to avoid losing their shirts: do not chase those artificially high dividend yields. Seriously. Instead, focus on established, boring companies with a long history of slowly, steadily growing their payouts year after year.
So dividend investing is fantastic for letting your money do the heavy lifting. But this next income stream? Well, it requires a little more sweat equity up front, but in return, it has literally created millions of wealthy individuals throughout history.
Idea number 2, rental real estate, the power of reliable monthly cash flow.
The core mechanic here is pretty straightforward. You purchase a physical property, you lease it to a tenant, and their monthly rent covers your mortgage, your taxes, and your insurance. Whatever's left over, that's your monthly cash flow. It's a tangible brick-and-mortar asset that not only generates monthly income, but historically goes up in value over time. When you step into this world, you're generally looking at 2 paths, residential or commercial. Residential rentals like single-family homes or small apartments definitely have a lower startup cost, and they're just easier for beginners to wrap their heads around. Commercial rentals, think office spaces or retail storefronts, require significantly more capital to get started and carry different economic risks, but they often yield much higher returns. Just know, both of these routes require a very real time investment.
Because let's be real, real estate is rarely fully passive, especially right out of the gate. Beginners vastly underestimate repairs. I mean, roofs only ever seem to leak at 3 a.m. on a Sunday, right? Another massive trap is bad tenant screening. A bad tenant will easily cost you more headaches and money than a vacant property ever will. Beginners also tend to ignore the long-term economic trends of a location, or they try to save a couple of bucks by managing the property themselves, which basically turns a passive investment into a super stressful second job. So, the actionable advice here? Run your numbers conservatively, always. And I mean always rigorously screen your tenants and seriously consider budgeting for a good property manager right from day one.
Now, real estate is undeniably powerful, but it's tethered to the physical world. It requires physical maintenance, boots on the ground, and a good chunk of capital. But this next idea? It exists entirely in the digital landscape, and it can just keep earning for years after the work is finished with almost zero overhead. Idea number 3. Digital products, the ultimate scalable asset.
Unlike physical items that cost money to manufacture, package, and ship every single time somebody buys one, a digital product scales perfectly. You create it exactly once, and you can sell it one time, or you can sell it 1,000,000 times at literally zero extra cost. You could write an ebook sharing your specific expertise, film an online course, design budget templates, create printables, or even develop software. The income potential here is absolutely staggering. Consider an ordinary person who just really loves organizing, right? They create a highly functional, visually appealing digital planner. They price it at, say, $20. Because it's digital, if they sell just 5 copies a day to a global audience, that is $3,000 a month in extra income from a file they designed one single time.
Operationally, this whole thing is remarkably simple. The startup cost is astonishingly low, usually just the cost of your laptop and maybe a couple of software subscriptions. It really breaks down into 3 simple steps. Step 1, you spend the initial time creating the awesome product. Step 2, you set up an automated storefront that handles the payments and zips off an instant email delivery. And step 3, you sell it infinitely. The financial risk is practically non-existent here because you aren't sitting on boxes of physical inventory in your garage.
Okay, but we need a reality check here. The internet is absolutely littered with digital products that have never made a single sale. Why? Because of the build it and they will come myth. Beginners make this fatal mistake of spending months creating a product only to realize at launch that they have absolutely no audience to sell it to. The time investment up front is high, but the ongoing time investment? That's all about marketing. You have to actively drive traffic to your automated system. So, the best advice if you want to succeed in the digital space? Focus on building an audience and solving a very specific problem for them first before you ever build the product. Actually, scratch that. Solving their problem is the product.
So the crucial takeaway here is this. Building wealth isn't just about working harder. It's about fundamentally shifting your mindset from trading your precious time for money to building and owning assets. We've laid down a solid foundation today. We've seen how dividend investing lets you own a literal slice of corporate profits. We've seen how real estate provides that tangible monthly cash flow. And we've seen how digital products offer unparalleled infinite scalability. But guess what? We have only just scratched the surface.
If these first 3 ideas build the foundation, what on earth are the remaining 4 income streams? Well, we are going to review the rest of the puzzle in part 2 of this explainer. Until then, I want you to ask yourself this. If you stopped working today, how long could you survive on the assets you currently own? It's a heavy question for sure, but honestly, it is the exact question that separates the wealthy from everyone else.
Welcome back to this explainer. If your financial foundation is already rock solid, it's time we build out your wealth arsenal. Today, we're mastering those final streams of passive income, the ones that can literally change your entire financial trajectory. Let's just set the stakes right out of the gate. Why do the wealthy actually build multiple income streams? Well, it's essentially the ultimate defense mechanism against crazy economic shifts. But at the same time, it's their most aggressive offense for building lasting generational wealth. It guarantees your financial independence, drastically cuts down your risk profile, and, perfectly maximizes that compound growth we all want. So here is our blueprint for today. We'll be looking at content and affiliate income, index funds, and automated systems. We're going to tackle 7 passive income myths, map out a realistic path to your first $1,000, and finally wrap up with the real wealth-building goal. Section 1. Content and affiliate income. These are those brilliant low-capital ideas where you trade your time for long-term equity. Take a YouTube content business, for example. You don't just magically unlock everything on day one, right? You start with basic ad revenue, getting paid just for getting eyeballs on your content. But as your authority builds, that's when brands step up to sponsor you. From there, you integrate affiliate marketing, and eventually you hit the absolute top of the pyramid, launching your own digital products. The really beautiful part about this model is that a single piece of content can keep generating cash across all 4 of those categories for literal years after you hit publish. It's wild. Now, let's look closer at affiliate marketing. The real long-term passive potential here comes from creating genuine, undeniable value in a super specific niche. Definitely not just spamming links everywhere. Think about a channel dedicated entirely to fixing vintage watches. By deeply understanding that very specific audience's problems and giving them actual helpful tutorials, you build immense trust. So when you eventually recommend a specific toolkit, they buy it naturally. The actual asset you're building here, it's trust. Section 2, Index Funds and Automated Systems. Let's move into the realm of truly automated wealth. You're probably wondering, okay, how much capital do I actually need to start messing around with index funds and ETFs? The beautiful truth? Just $100. Seriously, the barrier to entry has never been lower in human history. So scratch any excuses you might have. There's literally zero reason not to start right now. Index funds and ETFs are incredibly popular because they're basically the ultimate beginner strategy. They perfectly balance risk versus reward by letting you own a tiny, microscopic slice of the entire market. Now, this requires incredible patience, for sure, but it offers highly reliable wealth accumulation. Basically, your money just sits there, passively generating returns and automatically reinvesting those dividends to supercharge your compound growth over decades. It's like planting an orchard. And when we talk about building an online business, what we're really talking about is scaling through systems. Whether that's e-commerce, print on demand, where goods are only literally made when someone orders them, a software business, or a recurring subscription model, the secret sauce is exactly the same. You build the digital infrastructure once, just one time, and then you let automation and outsourced teams handle the heavy lifting of customer fulfillment. Section 3, 7 Passive Income Myths. It is absolutely time for a mindset reality check. Okay, let's absolutely shatter the ultimate illusion here. There is no magic wand for instant wealth. I know the internet loves to sell you this idea of clicking 3 buttons and waking up rich, but the reality? It's a lot closer to growing a garden. Building true passive income requires extreme upfront effort, laser-focused consistency, and honestly, a whole lot of ongoing asset maintenance. It all really boils down to this. Instant income just doesn't exist. And consistency is always going to beat a shortcut. Every single asset you build is going to demand maintenance. And true wealth? That requires immense patience for compound growth to finally take the wheel. So, protect yourself by diversifying your streams, invest heavily in your own ongoing financial education, and always remember that over time, smart systems will always outpace just working hard. Working hard is absolutely necessary, don't get me wrong, but systems outperform hard work alone. If you only ever rely on your own 2 hands, your income is strictly capped by the 24 hours in a single day. Systems? Systems run while you sleep. Section 4, your first $1,000. This is the beginner roadmap. Look, it takes a full year of serious grinding before any sort of long-term scaling actually kicks in. In your first 30 days, the setup and learning phase, expect to make exactly $0. By month 6, you're pushing through that painful obscurity phase, purely focused on churning out consistent content. It really isn't until the end of year 1 that you start seeing real monetization and growth. But man, that paves the way for the long-term exponential scaling of your systems. It's a grind, but it's so worth it. Section 5, the real wealth building goal. Let's talk about achieving true financial freedom. I need you to hear this. You aren't doing this to be lazy. You're doing this to construct incredibly valuable assets. Passive income is not about avoiding work. Unlike a regular 9-to-5 where your hourly effort just vanishes the second you clock out, the effort you pour into an asset stays there. It retains its value, and it literally continues to pay you back indefinitely. Ultimately, the goal isn't to stop working entirely. The goal is to build income streams that keep working even when you don't. Once your systems handle your baseline survival, your future work simply becomes a choice, one that's dictated by passion, not necessity, and that is a total game changer. So the big question is, which of these systems will you start building today to buy back your tomorrow? Let us know down in the comments, and hey, don't forget to subscribe so you can keep building your financial education with us. We'll see you in the next explainer.